Welcome back to another video. This is a different video. Everyone is talking about Adani NCDs, but the real question is, should we invest or should we stay away? But before that, what exactly is an NCD? How different is it from a fixed deposit? In this video, I'll break it down. Adani NCD in simple terms, returns, risks, credit ratings, whether it actually makes sense to apply or not for you. So watch till the end before making any investment decisions. So what is a NCD? Non-Convertible Debentures. Suppose if a company needs funds, it will take money from the investors. Investor lends money, company gives regular interest, and principal is returned at maturity. It's kind of a fixed deposit. Only thing is, companies are requesting for money, investors are giving money, company is giving interest. At the end of it, the FD matures and you get back your amount. Here you cannot convert this to shares. Keep that in mind. There are multiple types of NCDs: secured, unsecured, listed, unlisted. Secured meaning the sense it should be backed by company assets. It has lower risk compared to unsecured NCDs, lower interest rate than unsecured. Suppose if something goes wrong, we will be able to claim with those assets which are backed. It's like a security or collateral given for these NCDs. Unsecured are the opposite, not backed by any assets, higher risk since higher rates, heavily dependent on company's credit quality. And these NCDs can be listed on the stock exchange also. So listed NCDs are the one which are listed on stock exchange. They provide liquidity so that you can sell the NCDs in between for the same price or higher price depending on how the market fluctuates. Unlisted are the ones which are not traded on exchange. So it's like a physical FD, you have to wait till the maturity and has less liquidity. And also the interest rate. There are fixed NCDs, same interest throughout, and there are cumulative interest which are paid at maturity. And there are linked floating rate NCDs also which are linked to bank rates where the interest rate changes throughout the period. And there are some NCDs which gives regular payouts monthly, quarterly, and annually also. Like when you say it's a pure debt instruments, we have a predefined maturity period. It offers higher returns than FDs, and it has fixed as well as predictable interest rates and monthly, quarterly, and annual payouts. Lower risk than shares. It's just an alternative to fixed deposit with these characteristics. Now, Adani has launched this January 2026 secured NCD, targeting investors seeking stable cash flows. In this presentation, we will review about the details, returns, risk, and the key question: should you invest or not? See, everyone knows about Adani. I'll quickly tell about the company. It's a flagship. Adani Enterprises Limited is what is giving the NCD. It is a flagship company of the Adani Group. Its presence is in infrastructure, energy, airports, roads, integrated logistics, data centers, grid hydro, mining services, everything. It's a well-known company. Incorporated in 1993, headquarters in Ahmedabad, focuses on large-scale infrastructure and US business. And also the company is aligned with like long-term priorities such as digital infrastructure, sustainability, digital transportation, etc. It's a well-known reputed company is what is providing the NCDs. Let's look at the details. It's Jan 6th to Jan 19th. Here NCD might close earlier also if the entire amount gets subscribed. So 500 crore is the initial subscription and 500 crore is a green shoe option. When you say green shoe, if the first 500 crores does not get subscribed, the remaining 500 will not come into picture. Suppose if 500 crores get subscribed, then you will get additional 500 crores, so the total sum will be 1000 crores. Face value is 1000 per one NCD. Minimum investment is required is 10,000. And as I said, right, it's a secured. It is backed by identified assets. Redeemable. It can be redeemed monthly, quarterly, depending on the time period what they give. And they cannot be converted to shares. So they are non-convertible debentures. They will be listed also. As I said, it's a listed in NCDs. It will be listed in NSE and BSEs. Tenure, I'll explain it later. As I said, right, there are multiple tenures given, 2, 3, and 5 years. The interest pay options are annual, cumulative, and quarterly. If you say 24-month time period, the interest rate what they give is 8.60. In annual, the redemption amount will be 1000 because you would have got your yearly interest each year. So 860 means for 1000 rupees invested, you might get 860 rupees each year. But if you take cumulative, where the interest will be paid at the end of the year, at the end of 2 years, it will be 1179. Effectively, 860 into 2 is what you might get, bit higher than that, small amount. Similarly, if you take 3 years quarterly interest, you'll get 8.48, annual 8.75. So 875 for 1000 rupees invested. So each year you will get 875 rupees for the 3 years what you have invested if you take annual. But if you take cumulative, it will be a bit higher. Okay, but if you take annual, it will be like 1625 or something like that. But if you take cumulative, the amount will get added up and it will get cumulative interest. So the interest will be slightly higher than the annual and quarterly payouts. So it will be like 1286.45 for cumulative. This is for 1000 rupees invested. Similarly, we have for 5 years where the interest rate is 8.90, which is quite higher than the traditional FDs what they are giving it right now. As I said, quarterly 8.62% payout, annual 8.90, cumulative it's 1531.95 because each year's interest will be added to the principal and again it will be interest will be given. Cumulative has higher benefits, but yeah, that is how it works. And the credit ratings, as I said, right, these are like AM minus or AS stable credit ratings. It has high level of security. KR ratings and IRCA ratings have been given. Credit risk is comparatively low compared to other debt instruments. This is the third NCD which Adani is coming up. So the ratings are good. The company is well known. The objectives of this issue is refinancing and repayment of existing borrowings and funding capital expenditure of ongoing and upcoming projects, general corporate purpose. They are taking loan from retail investors. Who should invest? Strong and diversified parent group. Everyone knows that Adani is a well-known company who has people who have very good visibility about the company, its financial, its future projects can invest. Secured NCDs, as I said, it's a secured. The risk of defaulting are less. AA credit rating gives high safety, multiple payoff options. Listed NCDs offer exchange liquidity. People who have excessive money, who want to try out other options apart from traditional FDs which give higher risk, can look at these options. Who may avoid this? See, as you know, company is taking a lot of loans. It's a capital intensive high debt thing. Returns may not be higher than better bonds apart from this. Liquidity risk. Suddenly, if you want to liquidity, it might be a risk. Interest rate risk is also there. Liquidity, when I say, suppose you want to sell it on the exchange, but suppose if there are no buyers to buy that, it might be a problem. Okay, and as I said, not for high returns or zero volatility seekers. So it's listed on the exchange. The rates may vary. It may be high, low, and all those things. And suppose if you are an IPO investors and all those things, this money cannot be used for IPOs because it's a separate debt instrument. So people who have excessive funds and who know about this company and who are aware of this kind of risk can apply. Rest other traditional normal investors can avoid because it's a capital intensive high debt business. You don't have any other like features where you can apply with this money to the IPOs. Risk is always there and all those things are there. How can you apply? The other thing is, suppose if you want to apply, how can you apply? You can apply via net banking or through any NSE or BSE brokers also you can apply, or you can apply through UPI applications also. Once you get allotted, it will be credited to your demat account. So the simple FAQs is Adani NCD safe? They are AA rated, but low credit risk, but are not entirely risk free. Anything can happen. Are this NCD better than fixed deposit? Yes, they are often higher returns than bank FD, but carry higher risk. Okay, bank has insurance and all those things. Yeah, their process might be a bit simpler. Here, process might be a bit more complicated. Can I sell the NCDs before maturity? Yes, because they are listed on stock markets. Minimum investment is 10,000. You have to buy 10 NCDs. And interest rates, taxation, yes, they are taxable as per income tax slabs. TGS, yes, TD is also applicable. Who should invest? Investor with very low risk appetite or those heavily exposed to infrastructure strong might consider avoiding it. When I say who should invest, people who have knowledge about the company, who trust this company, because if anything negative news is about the company is oftenly recently come in the market and all those things, Hindenburg report and all those things. So if you don't want any volatility and all those things, people should avoid. Who have excessive funds only can think about it. So this is the high level details about NCD and what NCD details are there. Please like, share and comment. Thank you.